Welcome to Money Otter. I'm Alice.
And I'm Benjamin. Today, we're diving into the latest financial news, particularly the recent surge in the Chinese stock market. First, let's take a look on some viral video about the craziness of China market.
A 股又涨疯了，直接冲到3300点，多家券商又被干崩了，银证转账你都转不进去了，这啥情况？据说00后都要入市了，有人一天赚了52万，我有一朋友赚了几千万了。现在，谁说韭菜现在断档了？00后这不就跑步入场了吗？对不对？过几天更多了啊，全民炒股。
兄弟们，不管了，今天我筹到钱了，明天周一干啊！不涨也干，跌也干，管他呢，只要干进去就拉倒啊！就是抢着干。现在你看看各个券商啊，那个开户的排着队排着1公里以外去了啊！这个时候是赶紧找钱，使劲往里边干。什么清华北大的不如胆子大的，什么哈佛耶鲁的不如自己敢赌的，就是往死里干啊！怂一波就是一辈子。
我感觉我老公最近疯了，为什么？最近股市不是也比较疯吗？你知道他什么想法吗？他说我们家最近不是卖房子吗？他要把我们的卖房款拿出来炒股。关键他都没有炒过股，他都没有买过股票，让我给他买。但我平时也就1-2万的去买的，没有操作过这么大金额的，我怎么敢让他去找他爸妈商量去？你说怎么可能会把卖房款给你拿去炒股？因为他是不是脑子有坑？他最近这几天天天跟我讲这个事情，不会真的有人把卖房款拿出来炒股吧？有这么疯的人吗？我真的被他气死了。现在脑子里面就指着，你知道吧？就指着股市发家致富了，他就这样子的。
It's been quite a wild ride, hasn't it?
It has. The Shanghai Composite Index has skyrocketed from around 2,700 points to over 3,300 after the Chinese government announced new financial policies, including allowing borrowing for stock purchases. There's huge interest from Chinese retail investors, and even well-known hedge fund managers like David Tepper are publicly stating they're buying everything China.
It definitely shows market momentum, but there's a lot of debate about whether this rally is sustainable. Some are calling it a man-made bull market.
And for good reason. The Chinese government is facing significant financial pressure and desperately needs to raise funds. Local governments rely heavily on land sales for revenue, but the struggling real estate market is hurting their finances.
Exactly. Plus, the broader Chinese economy is struggling with the pandemic's impact, foreign investment withdrawals, and weak domestic demand. This creates a vicious cycle where economic stagnation impacts tax revenue and hampers investment.
In the first half of 2024, only Shanghai's local government achieved a fiscal surplus. The remaining 30 provinces ran deficits, with nearly half exceeding 200 billion yuan. We're seeing reports of government employees going unpaid and tax collection efforts going back decades.
Even more concerning, China's net foreign direct investment withdrawals became negative for the first time since 2010. The unemployment rate for those aged 16 to 24 has shot up to 21.3%. That's 1 in 5 young people out of work.
It seems the government is in a bind. They need money to stimulate the economy, but don't have readily available funds. This pressure is evident in their decision to stimulate the stock market. It's ironic because China has historically opposed Western-style quantitative easing, yet they're allowing borrowing for stock investments.
It appears they're trying to create a wealth effect, hoping increased consumer and business confidence will boost investment and spending. They also want to help government funds, the national team, recoup losses and raise money.
It begs the question, will they prioritize the economy or the national team? It feels like they're creating a bubble to bail themselves out.
The key question is, can they keep this man-made bull market alive? I think it's a very real possibility that the government will try to keep the market going for a while longer, maybe even until the end of the year, to help their funds recover and to raise capital. What we expect to happen in coming weeks are, on October 8th, the market reopens after the extended holiday. It will rally, and the government fund will gradually liquidate their position. In the next few days after the bad economy data releases, the market will be depressed and price will fall. There could be even more bad news from the corporation. Then the government fund will start to buy. After they build up their position, then the policymaker will announce new stimulus and the bull market will rally again.
It's a risky strategy. What happens when the music stops? What if they're forced to end the market manipulation?
There are huge risks. First, policy changes in China can be unpredictable and swift. We might see significant market drops and restrictions on selling shares, potentially with penalties.
And let's not forget about hot money. This rally seems fueled by speculation, with investors hoping for a quick profit before getting out.
So, what should investors do? I think they should only allocate a small portion of their portfolio to the Chinese stock market. I'm only at 2% right now and keeping a close eye on things.
I'm doing the same. I'm using a US broker due to concerns about capital being frozen if the government implements strict controls. I'm primarily focused on tech companies like Alibaba, Baidu, and Tencent, and plan to exit my position by year's end, or if the Shanghai Composite Index hits 5,000.
A sensible strategy. There's a lot of uncertainty surrounding the Chinese stock market, but staying informed and making decisions based on a clear understanding of the risks is crucial. We'll continue to monitor the situation and share our thoughts with you.
Absolutely. We hope you found this discussion informative. Subscribe to our channel for more updates on the financial markets and stay tuned for our next episode. Okay.